Welcome to Morning Trade with Money Control in association with M-Stock by Virai Asset. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends, and most importantly, your queries during the course of the show. So guys, keep commenting on our live feed on YouTube and we'll have them addressed by our technical analyst. Before bringing him on board, let's see what the global handover looks like. And it looks like bulls are making a comeback. We're looking at an extremely strong handover from key global markets. Dow rallied more than 800 points on Friday, rebounding off the lows of the bear market last week and capping its first weekly advance since the month of May. S&P 500 closed 3.1% higher. Nasdaq rallied 3.3% and all major averages snapped the three-week losing streak. European markets closed sharply higher as well. Stock 600 surged 2.6%, logging its best day in more than 3 months. CAC led the pack, in EU soaring more than 3.2%. Other indices also gained in the range of 1.5 to 2.5%. Now, stocks in Asia Pacific, they rise with Hang Seng surging nearly 2%. For our own markets, SGX Nifty signals a very, very strong open. On the show today, we do a deep dive into the Zomato-Blinkit deal, along with discussing other stocks in news, Dr. Reddy's, SIS, Federal Bank and Repco Home Finance. Let's get going and discuss some stocks that are likely to be in the spotlight today with Hemen Kapadia of KR Choksey Securities. Good morning, Hemen. Are the bulls here to stay? What is the trade setup hinting at?
A very good morning to you, Karunya. Thank you for having me. Bulls are here to stay, yes, at least for some more time, Karunya. Couple of things. Crude seems to have peaked for the time being. So there is some relief. Small corrective bounce cannot be ruled out. But overall, I think time being the up move, at least in the near term, is over. So there is some relief coming in over there. The VIX has cooled off to sub 21 in India. And if I were to look at the dollar index, that also seems to be getting heavy. So everything seems to suggest that, yes, we are ripe for recovery. Coming back to your main question, is it going to sustain? There's a gap between 16,182 and 15,886. Now, this gap has been there for the last couple of weeks. We will make a sincere attempt at trying to cover up this gap, maybe not today, tomorrow, day after. Expiry weeks, so it's still going to be volatile with rollover and all. If this gap gets covered up, that is positive. If we don't and start coming down, it's a problem. There will be resistance at this gap. 15.2 as a support level as held. So as long as 15.2 holds, I would be sanguine. But at the risk of repetition, this gap will provide significant resistance and we will see a correction coming from there. In that, if we don't break 15,200, it doesn't look as if it does. I think that's the first sign of stability coming in after a long time journey.
Okay. All right, makes sense. But let's talk about some individual stocks as well. This is definitely a critical week for the market's expiry, coming up in the next few days. Some important levels to watch out for. Market seems to be recovering for now. But individually, if you look at the stocks in focus today, first up is Dr. Reddy's. They've acquired branded and generics injectables product portfolio from US-based Eaton Pharma. They've made an upfront payment in cash of $5 million plus contingent payments of up to $45 million is something that has been reported to the exchanges. But if we talk about the technicals of Dr. Reddy's, last few days have been quite encouraging, quite optimistic and upbeat for the counter. But will that momentum sustain? What do you think?
Well, it spent 5 weeks, Karunya, doing nothing, in a range roughly between 4075 on the downside and 4425 on the upside. So we have been indecisive for 5 weeks. This is the 6th week which we are commencing now. So simply put, if we take out 4425 and we close above it, that would imply a mini breakout of sorts. And if that happens, we should gravitate towards 46.50 or so. But yes, this level needs to be overcome in terms of closing. If I were to tell you that the move before this sideways consolidation seems to be bullish. So yes, that is a possibility, but the level needs to be respected in terms of closing.
Okay. I want to also highlight a Repco Home Finance, some updates coming in here. Invesco Mutual Fund has offloaded slightly over 7 lakh shares in the company, and these stocks were sold at an average price point of 117 rupees per share. Repco, I think it closed close to 132 rupees per share on Friday. Last week was actually fairly, positive, keeping in line with the overall market sentiment. Repco also saw a bit of a recovery on its stock price. But what do you think? How will markets react today to Repco?
I think, like you said, they've sold. So the Friday volume figures show 14 lakh shares gross on NSE. I think that's the highest volume on Repco since 22nd Feb, 19 Feb 2021. Huge volume. Now, I would say this volume has happened after it's come up from a high of 390 crore. I would say smart money is bought. Now, yesterday's lows need to remain unscathed at least for a few trading sessions, and that would mean that we're deeply oversold. Two, there's a reversal at play, and three, it would also be the probable onset of a higher top, higher bottom move, at least on the short-term chart. So I would say timing burst is over, assuming the level holds.
Okay, all right. There are a couple of board meets lined up this week as well for some fundraise activity. And on back of that, I want to highlight a federal bank as well as SIS Limited. Now, SIS has been a slow mover if you look at the 1 month chart, but federal bank is trying to sort of show some recovery. It has been a slow and steady move for the past 30, 40 odd days for this particular counter. Any of these names that you like?
Well, Federal Bank has shown some relative strength, Karunya. I mean, the markets have virtually fallen off a cliff. Stocks have been even more severe and acute. 9 months, Federal Bank has moved between 78 on the downside and 107 on the upside. Frankly speaking, a lot of stocks have come off sharply. So from that point of view, Federal Bank has shown relative strength. If you say very exciting, I wouldn't say so. Deeply oversold, we're at 89.35. A close about 90 would trigger off some near-term action. The bigger picture remains relatively strong, but after 9 months of sideways movement, Karunya, I'm not sure anything will matter unless there is a decisive breakout, upside or downside. As of now, the downside breakout chances are minimal. SIS is something that you mentioned. Now, SIS seems to be looking interesting in the sense it's oversold in the shorter term. Downside appears limited. There's strong support at 435. So if 435 doesn't break, there should be some positives. And if you look at the longer term charts, Karunya, 420, 560, 1 year and counting, nothing happening, absolutely nothing.
Okay, all right, point taken. We're already getting some questions on our feed on Zomato, and I know, there's not enough of a technical history to sort of understand the chart pattern. But if we talk about falling off the cliff, Zomato, perhaps if we look at the chart and the way the stock has fallen in the last 7-8 months, definitely a good example for falling off the cliff. And what our viewers want to understand is, now that there's been another announcement on Friday about Zomato buying Blinkit for a whopping 4,400 crores, what is likely to happen to the counter now? What can you predict?
Well, I'm not a fundamental analyst, but I don't know. I think Blinkit X Growth has always been loss-making, but anyway, so has been Zomato. 4 weeks of a sideways movement, Karunya, deeply oversold, some positive divergence, some technical green shoots, not only a short-term, a medium-term bottom in place. Haven't been a big fan of Zomato. I do order from Zomato though. I have a feeling after a 4-week sideways movement, stock seems set for at least near-term rise. I think 65 level holds. We are heading towards 80. So yes, despite a paucity of data, I have a feeling that Zomato could be giving an upside over the next few weeks. Technically, a base formation has been done, Karunya, and upside seems to be around the corner.
Okay, well, one can love the stock or hate the stock, but many of us out there cannot help but use this particular app. But let's talk fundamentals. Hemen, we'll just come back to you in a moment, because in a big development, like I said, Zomato will be acquiring Blinkit for 4,447 crore rupees in an all-stock deal. So let's discuss this more. My colleague Chandra Srikanth is with us. Chandra, One loss-making company, Zomato, acquiring another loss-making company. How much of a sense does this make to the street? What are industry watchers saying? What is, what are they? What is their assessment of the transaction?
Morning, Karunya. Good to be on your show. Now, this deal was in the works at least for a year. I mean, we've been reporting it every few months. The Zomato is in talks to acquire Blinkit. But in terms of the valuation itself, it was actually expected to happen at around 700 million, which itself is a downside considering Blinkit was last valued at $1 billion. But if you look at the final valuation that Zomato has given for Blinkit, it's $570 million or 447 crore rupees. And this would entail a dilution of at least 7.88% of Zomato stock. Now, though this is happening at a valuation that is lesser than 1 billion at a steeper cut, a lot of stakeholders are disappointed because this is happening below Zomato's own listing price. So if you look at the way Zomato has valued itself for Blinkit, it's 70 rupees. But the way it valued itself for public shareholders when it listed, or its listing price was around 76 rupees.
Yeah.
So a lot of questions on why this is happening below the listing price. As you said, it's going to be one loss-making firm acquiring another. So we have to wait and see how the synergies work out. For now, they're talking about integrating delivery fleet. They're talking about having a Blinkit tab on Zomato app, though the apps will remain separate for some time to come. And they believe the customer wallet share will go up overall because the frequency is very high as far as grocery ordering and grocery delivery is concerned. But of course, questions remain, could Zomato have built this on its own? Perhaps not, because they have tried twice and failed. So this, in a sense, is their third attempt at grocery at a time when Swiggy is already doubling down on Instamart.
This is not the first time Zomato has tried to sort of dabble into the grocery space. Could this be their last-ditch attempt to perhaps try and find their feet in this particular segment of grocery? And also, what kind of a value are they looking to derive from this acquisition?
Right. So if you look at what Zomato founder Deepinder Goyal has said, even when they made that first initial investment in Blinkit last year, $100 million at a valuation of 1 billion, they said that Blinkit is the path that they are going to take to crack grocery. Because as you said, Zomato has tried to do grocery twice in the past, and then it subsequently shut it down because it just couldn't make it work. So this, in a sense, is going to be its final last-ditch attempt. It better be, because they are throwing 4,447 crore at Blinkit, and this is not their first investment. They've already invested $100 million. After that, they said they are going to extend a line of credit of $150 million to keep Blinkit afloat, because Blinkit came under a huge business strain in the last few months, and now they're again talking about $570 million. So they've earmarked quite a big amount for Blinkit, and they expect the Zomato's customers to benefit from Blinkit, Blinkit's customers to benefit from Zomato, and vice versa. They say that Blinkit's order value is already catching up with Zomato, and this will only continue going forward, and that the overall customer wallet share will increase as a result, with customers spending more money on the Zomato app, because eventually they will look at adding the Blinkit tab on the Zomato app. So these are some of the values and synergies they're trying to derive. They will also look to integrate delivery fleet, because the food delivery time and the grocery delivery time are complementary. They usually happen at different time slots. So if your delivery fleet is stationary at that point, it can be deployed for quick commerce. So these are some of the things they are saying. We'll of course have to wait and see how shareholders react to this deal, because a lot of questions emerging on why Zomato had to fork out such a huge amount when Swiggy has managed to build this organically on their own.
I know, Chandra, you don't want to talk about the stock price and the market reactions, but I'm sure you've tracked enough and more such deals and transactions in the startup universe to know how it will go down with the street. What is your verdict of this entire, announcement that has happened on Friday?
So two ways to look at it, Karunya. First of all, the deal announcement was supposed to happen 2-3 weeks ago, but it kept getting delayed. And the sense that we got from our sources is it's getting delayed because Dipinder Goyal, the founder of Zomato, wanted to take all the institutional investors, the mutual funds into confidence before announcing the deal because he did not want to risk, another a steep fall in his stock. But if you look at the reaction of market analysts, market commentators on Friday evening since the announcement happened, it hasn't been too positive. The pricing, the fact that this is happening below listing price, the fact about one loss-making entity acquiring another before a clear path to profitability, and the lack of adequate disclosures. Blinkit's founder Albinder Dhinsa is married to Akriti Chopra, who was elevated as Zomato co-founder last year. Now, she may not be a KMP, but why wasn't that disclosed in the spirit of transparency and governance? So, lot of questions on all these aspects. We'll of course have to wait and see if the street has digested this deal, or if there's more pain to look forward to as far as Zomato is concerned.
All right, Chandra, I'm sure you've been able to address a lot of questions that many of our viewers also had with respect to Zomato and its fundamentals and, of course, this very important deal that was announced on Friday. Thank you so much for joining in. Let's see how the stock reacts, though. Yeah, on Friday, it shut shop with a gain of about 1.1%. But today, going by what Chandra said and what the reports are saying, it may not be a great day for Zomato. Let's wait and see. Several other queries have also come in the meantime. Let's bring back Hemen on board. Okay, we have a question on OMCs. Abhishek has asked, what is the intraday for oil marketing companies? But Hemen, not just intraday, but talk to us about, the next couple of days and weeks that you foresee for OMCs. Any names if you want to flag off?
BPCL continues to post lower tops, lower bottoms, Karunya. Frankly speaking, there is support at 290, but the technical picture doesn't inspire too much of confidence. An oversold situation, yes, but the whole market has been oversold, honestly. So maybe a dead cat bounce possible. And if we were to look at HPCL, similar scenario. So, I mean, they don't look good structurally, they are weak. And after such a significant cool off, I think some relief cannot be ruled out because they're all at support levels. You look at ONGC, look at BPCL, you look at HPCL, and you can also look at oil, Karunya. So they all are similarly poised, but nothing chattering or nothing which would compel you to take a significant trade. Maybe like you were asked, intraday, possible.
Okay, all right. I want to also talk to you about KPIT Technologies. Whistled, this handle called Whistle, we don't have the viewer's name. They want your view on this particular script. But KPIT last 1 month has seen a fair amount of recovery. It has, in fact, cooled off from the recent highs as well, but still perched close to that 500 mark. Which way do you think it's headed, Hemen?
I think IT is showing some resilience. Not a day or not a couple of days gone, but otherwise IT has shown resilience, and with Infosys leading the pack, I have a feeling IT should do better. Coming back to mid-cap IT, I like Birlasoft more. Having said that, support at 450, a close above 510 in KPIT would mean an upside. So near term, there's positive divergence. You have a small possible bottom in place. Downside appears limited, especially if 450 doesn't break. So I would be more sanguine for a recovery or a small upside from your Karunya as far as KPIT is concerned.
You were just talking about Federal Bank earlier on in the show. There's one more bank from the mid-cap private lender space that I want to flag off, and that's RBL. Sunil Yadav wants your suggestion, your advice on whether to buy this particular script or not.
Ouch. Frankly speaking, the performance has been abysmal. Tremendous underperformance. In fact, if my charts are correct, I mean, latest prices, I believe it's posted a fresh all-time low, Karunya. Now, that does not augur well. So unless the investor is an extremely high-risk investor with a great appetite, I wouldn't be very excited. Yeah, banks are looking promising. I think behind HDFC Bank, all the banks and Kotak Bank, all the banks are going to recover. So strong support at 74. I think it's a forced trade. I would prefer to keep away. A small bounce cannot be ruled out, but like I said, the past history has been go for it.
Okay, all right. Next question is from Joey, and he wants your advice on Mahindra and Mahindra. And like many of the other auto peers, this one has also shown phenomenal resilience in the last 3.5-4 months. From 680, 690 levels, the way the stock has built up that momentum from the lows of March is phenomenal. But is it a prudent idea to enter at these current levels above 1,000 rupees a share, or should they wait for some dips and then perhaps lap it up?
Superb observation, very valid point, Karunya. We're at all-time highs. I think the Scorpio is being launched today on 27th. There's a lot of expectation. Scorpio has done very, very well for them. And the new Scorpio is, at least from whatever I understand from media, is also supposed to be going to do well. But like I said, we moved from 670 to 1072. We've been up continuously, tremendous outperformance. But would I jump in at this level? I'm not sure. This is probably in anticipation of the Scorpio launch. Maybe there could be some profit booking. So I would say we are at 1072. 1150, 1200 seems to be in the horizon. But coming back to your main question, buying fresh at this level, I'm not sure if the risk-reward ratio is in favor after such a huge run-up. So I would prefer to wait for a cooler current.
I want to also talk about Deepak Nitrite. This has been, a trader's favorite stock. Last year has been very, very solid. But this year, of course, in line with the overall selling and the market consolidation that has taken place, it has hampered the movement of Deepak as well. From October highs of 2,900 rupees, right now it's trading at 1,800 levels. Good time to add, or should one avoid right now?
If you have a short-term view, and maybe a medium-term view, but currently I'll stick to short-term, Karunya. It makes sense to buy. Strong support at 1,700. If I look at the long-term charts, the move which started in 2019 mid, time being has exhausted itself. But short-term, there is resilience, positive divergence, sideways movement. We're at 1801. Above 1850, we are going to see a bounce coming in. So if I have a short-term view, yes, it's a buy, Karunya.
Okay, all right. And Hemen, of course, we would like to also know what are the stocks that you would like to pick out for our viewers, from a short to medium term. Tell us what's on your list.
Okay, firstly, I have a buy call on Dalmia Bharat Limited. The stock has been moving sideways. The mechanical indicators have now just signaled a crossover buy. There has been a hint of positive divergence, and we Rex dividend now, and the stock seems set to give a decent, if not a good bounce from here. So one can buy from a trading point of view, Dalmia Bharat at 1295, stop loss 1270, target of 1345. And secondly, a buy call on IEX, Indian Energy Exchange, Karunya. The logic is extremely similar. Oversold, positive divergence, crossover buys on the cusp of forming a higher top, higher bottom formation on the daily chart. So one can buy IEX at 174, stop loss 167, target 198. Both these stocks would approximately have a time frame of probably 2 weeks or so, Karunya.
Okay, so two stocks from the broader markets, Dalmia Bharat and IEX, flagged off by Hemen Kapadia. Thank you so much, Hemen, for joining in and helping our viewers out as always. Pleasure chatting with you. That's all we have in this edition of Morning Trade, guys. Stay tuned to Money Control. Markets with Santo and CJ is coming up next.